All right, guys, I want to get into this trade recap here. So this was a long on the NASDAQ that I took using Edgeful data. So I do want to get into the dashboard, go over some of that first. But I made about $400 times 2 accounts in like 6 minutes. So just a quick scalp. It was for about 1.2R. Really quick delivery. So I want to go over this one. And of course, we got to get into the data. So let's get started with that. This is the Edgeful dashboard. If you notice, they've really revamped everything. I mean, the layout and the aesthetic of the site now just looks beautiful, and it's a lot easier to navigate everything. I've been really enjoying it. So I first want to get into data for the last 6 months because this is just really interesting. So we're talking about the initial balance breakout. Of course, I'm always referencing the initial balance, but I have to. I mean, it's one of the most powerful statistics that I use in my trading every single day. And especially lately, just because of the volatility that we've been having with the Trump presidency, market conditions are definitely shifting a little bit. And what I've noticed is that once we get a direction going in the NASDAQ, we just really know how to run. And the initial balance really kind of shows that. So if you're unaware what the initial balance is, I'll go over it real quick. It's just the first hour of trading of the New York session. So from 9:30 to 10:30 a.m., we're going to put in a range, and that's our initial balance. And what the data is telling us is that once we break one side of that initial balance, we are not going to come back and break the opposing side of that range 82% of the time. So we're only getting single breaks over 80% of the time. That's an insane edge and a huge amount of power to actually frame directional biases knowing this data, right? So the way I use it is once we get a break of that IB, I'm not going to fade that move. If we get a break to the upside, I'm not looking for shorts. I'm going to stick to that long bias. And if we get pullbacks, I'm going to see that as a gift to get into the market at a better price. And that's exactly what I did in this recording that we're going to go over. But just real quick, I know this is only data for the last 6 months. And while I think it is important to know what the market regime and what data is working best in the most recent months for price action so that you can really stay in line with the current market conditions, I just want to show for the last 5 years, this statistic is really unique because it has consistency over a longer time horizon. So for the last 5 years, the NASDAQ only breaks the initial balance in one direction 75% of the time. So this is consistent over a long time horizon, but especially in the last 6 months, we're having over 82% probability in getting this directional bias. So let's get into the trade recording. I'm going to go over that and just kind of walk you guys through it, what's going on, how I executed on the position, and how I managed the trade. So let's get into that right now. All right, let's get into the trade recording here. So I just set my limit order to get into a buy on the NASDAQ, and this is late in the day. So this is around the power hour session. So obviously the initial balance has already been broken and it's been broken to the upside. So what is the significance of that for me? Well, that means I can take the decision making of looking for a directional bias. I can just throw that out the window. I don't need to overcomplicate it. I can rely on the data that tells me to stick to the long bias. And I think a lot of traders actually underestimate how important having a daily bias is in your decision making, right? I don't need to get caught up in the minutia of every little move trying to play both sides of the market at this point. I'm going to stick to that long bias and wait for the right moment to strike on a high probability idea. That's exactly what we did here. So at that point of using technical analysis to get the entry, we tapped into that 5-minute fair value gap, swept an internal low, swing failure patterned it, and I'm just getting into the trade on that reaction. So that red rectangular box is a 1-minute bearish fair value gap. We're about to inverse that, which is just giving me confirmation to stay in the move, right? At this point, my stops are basically at break even, risk-free on the trade. And if you see here, I'm about to close out of the move. I also note that we have equal highs right there, but I don't need to wait for that. If we start pulling back, I'm just going to get out of the trade. Boom, $400 in about 6 minutes times 2 accounts. And that's it.